And welcome to another edition of Access Central Television on Public Access TV right here, Channel 20. Anyway, we have today Jonathan Buchanan, an old friend, a good guest. He's been on before. Very interesting points of view, I must say, and that's why we have him on.
Pleasure.
Very nice to have you back. Now, we like to talk about, politics and
Sure.
current events, hot button issues, things like that, right?
Things that matter.
Things that matter, and
Right.
I think more people should talk about these things because,
I
why is it that people are afraid? They always say, "Don't talk about politics and religion," and those are the two things you should be talking about.
Well, I know the taboo, quote unquote, is money, politics, and religion. Those are things you shouldn't talk about. That's because people have a lot of passion about those three areas.
That's good.
Their religion, either they're very into it or they're not into it.
Right.
With politics, same thing. It could be into it, not into it.
Sure.
They can have some strong beliefs in what they believe in. And then money is something where either they have a lot and they don't want to talk about it because they don't want people to know about it, or they don't have enough and they don't want to talk about it because they're depressed that they don't have enough.
All right. Well, speaking of money,
I think some of it is a mixture between family and school, education, that people have to feel comfortable in discussing those topics. I don't think there's anything wrong with discussing politics. I think everyone should get out and vote and participate in politics, learn about the candidates, understand the issues. Because even though you have all of these special interest groups that contribute, really it comes down to your vote. And
Sure.
You don't have to vote for that person. If you think that person has been bought as far as a politician, you
Right.
don't have to you don't have to vote for them. There's always other alternatives.
of course. Well, that's what I was saying though. Is like everybody has their own personal opinions, right? And sure, if they want to keep it private, whatever, sure.
Mm-hmm.
But you go in the voting booth, it's going to be private anyway, who you vote for, so that's fine. But I don't see a problem with talking about it, because even if you disagree with somebody, you can get your points across and they can get theirs, and it gets you thinking. And it kind of helps. I mean, it might not change your mind, it probably won't, but then again, at least it gets you thinking about the other side, and maybe you get an understanding of why people don't vote the same way you do, which is that's what America's really about, is free speech, exchange of ideas, trying to figure out not who's right or wrong, but why people think the way they do.
Sure.
So now what I like talking about with you is especially economics, because you have a background in it.
Sure.
So you're educated and you know what you're talking about.
That's right.
I'm not saying you're 100% right all the time, but
Your opinion.
right. But but for example, for example how to invest money.
Sure.
Okay, so one of the things I wanted to ask you today was like, what's the best way? If you either win the lotto, or somehow you inherit a lot of money, or or maybe you saved up your whole life and you have this big chunk of money. Sure. What do you do with it? How do you make the best of it? Instead of just spending it. Unfortunately, a lot of people do that.
Yeah, we know someone who did that.
Yeah, it's a shame, because if you have a nice lump sum of money, what is the best thing to do with it? You don't want to just spend it all.
Especially if you've never had a lot of money,
Right.
the temptation of wanting to splurge or get things that you've always wanted is very powerful.
Of course.
And I understand people wanting nice things.
Sure.
I'm no different than any other person as far as wanting nice things.
Right.
But you also have to have discipline. And
Right.
You have to think things out thoroughly.
Okay.
Take the time, leave the money into a checking or savings account, pretend it doesn't exist, and just think out what it is you want to do. How do I want to invest this? Do I want to invest it?
Right.
Take a few days, look at the market, watch CNBC or Fox Business or Bloomberg.
Okay.
See if the market's volatile. Maybe it's too volatile for you.
Well, what if somebody doesn't know anything about You know, let's.
And that's part of the problem, is that people don't take the time to learn about the market.
Right.
I remember there was reading a statistic that people spend more time planning out a vacation than they do looking at their 401k plan.
I believe
or
that.
something of that nature.
I believe that.
And I think it's completely true.
Yeah.
To take a few hours a week just to kind of get an idea of what's going on in the economy, I think there's nothing wrong with that.
No, but it takes a lot of, because there's a lot out there. There's a lot of different. It's complicated for people because, you got annuities, you got bonds, you got stocks, you got, EFTs. You got. There's so many different ways, to invest the money, and people are afraid because they hear all these horror stories about losing it, right? And I guess a lot of people would say, well, I'd rather lose it, on having fun than just throwing it into a stock market and hoping for the best.
I've always told people, if you want to put it in the market,
Yeah.
I would not go with selecting individual stocks if
Okay.
you're doing it on your own.
Okay.
And the reason being is it takes a lot of time and a lot of research
Right.
to find those names, and you have to commit time to that.
Right,
It's
right.
not just let me buy Facebook and that's it.
Okay.
Because Facebook may look great now, doesn't mean it's going to look great 5 or 10 years from now. And so
Good point.
you have to know, is this something that I want as a long-term investment? And not only that, Facebook could fall out of favor.
Sure.
Just like
sure.
MySpace fell out of favor.
Absolutely.
Just like Google overtook Yahoo
Right.
as search. So social media and a lot of what's happening on the internet, you have what's in now, and then you have all that stuff is out. Twitter is a perfect example of when it came out, it was hot and everybody was on it. But if you've been following Twitter, they've been having some real problems
Yeah.
in the last several months.
Well, those are tech stocks, right? Those are more like computer oriented.
But even with consumer discretionary or consumer staple stocks like Coke and Pepsi and McDonald's, McDonald's has been having a lot of problems. There's a
Wow,
couple
really?
CEOs. People
Wow.
aren't eating there. But
Wow,
people
they've
are
been
eating
around
at Burger
forever,
King.
though.
People are eating at Burger King.
Oh,
Why?
really?
Because Burger King revamped their menu. They have custom drinks and nice sandwiches, and something Wendy's has done with making specialty beverages. And so that's brought a little bit of business to them.
Right.
And maybe it's hurt McDonald's.
Okay.
So they need to sort of revamp their menu and try to create something that people want. Then you have this whole health eating movement of healthy eating.
Right.
And so if you're going to eat fast food, it's like, well, which of the three am I going to eat? Wendy's, Burger King, or McDonald's? And
Right.
a lot of people feel that Wendy's or Burger King maybe is a little healthier.
Okay.
Because Burger King flame broils their burgers,
Right.
whereas McDonald's fries theirs.
Right.
So you have that movement too, where people want to eat organic and healthier options.
Well, aren't they all three
That's why
really not good
Chipotle's
for you?
doing really well.
Okay.
You know,
when
I'm
you-
not going to pass judgment on.
I mean,
how
when you
people
eat fast food, you don't expect to really eat healthy now, do you? Come on.
You can eat healthy, actually. You can
you-
have a
you think
Diet
so?
Coke. You can have a salad.
Yeah.
They do have some options there,
know,
other than just a burger.
I read that like a Big Mac has twice as much salt in it than what you need in a day. That's
Probably true.
That's crazy.
I'm not gonna argue about the health of McDonald's food, but I have to say that McDonald's does provide an affordable meal for a lot of people
Well, it
who
does.
maybe can't afford to get a burger at Five Guys or Shake Shack.
Right.
And
right.
a lot of times, I think it's more hype with those gourmet burger places than anything.
Right. But we're kind of getting a little.
But yeah, just to get back to investing.
Yeah, I want to get back on topic where.
The best
really-
option that I would tell someone,
Yeah.
if they were looking to put money in an index, is to find a low-cost index fund like a Vanguard, and put your money really in two funds, like a total stock market, which is going to cover the S&P 500, the S&P 400, and the S&P 600. Basically, it's large cap, mid cap, small cap.
Okay.
And then a Vanguard total international market, which will have emerging, Europe, Asia Pacific area.
Okay.
And that is a basic core index. You can allocate it maybe 65% U.S., 35% international.
Okay.
That's I've actually seen portfolios where that's the only investment that someone has, and they have millions of dollars in both funds.
Wow.
And,
Wow.
And
Now, what kind of return are we talking here? Because, I mean,
you'll do market returns between maybe 8 and 11% a year.
And that's more than obviously the standard rate of
It's better than anything you'll get in the bank, that's for
yeah.
sure.
So what's the inflation rate right now?
Well, you have generally 3%, and so
So 11 is way more than
so
that.
you want to get something a little better than that. Basically, if you keep your money in the bank, inflation is going to eat away at it.
Right.
You really have to be in the stock market.
There's no other way. There's, like,
well,
what about
yeah.
gold, maybe, or?
I mean, you can own oil.
Well, that's an interesting.
And
okay.
That unfortunately is out of most people's reach.
Is there a minimum for that? What,
It's first you have to make sure that you're not getting involved in an oil program. It's a scam. And
See, everything- you gotta be
and
careful.
you also have to understand that business, and the majority of people don't. So if you're blessed to know somebody who's in that field, and you can kind of piggyback off of them, then that's a good thing. But the majority of people are not going to be able to get into that.
So let's say, but again, what if you had like a lump sum, let's say $1 million, and either you won the lotto or you inherited whatever, you saved it up. Now you have this chunk,
Sure.
and you're getting older, and you want to have some for retirement. But I mean, is it okay to take like maybe 10% of that and just blow it on fun? I mean, is that really that terrible, or?
I think the first thing, I'm a strong advocate for zero debt.
Okay.
And that means
Okay.
pay off your bills.
Oh, obviously, yeah. Okay, okay.
If you can get rid of your mortgage.
Right.
I hear some people say, "Oh, don't do that." If you don't owe anybody money, you're in a good position.
Okay.
Not owing money to anyone
Sure.
is great.
Sure.
If you want to take some of that money and get yourself a nice car like a Tesla,
That's a nice car, definitely. Or I mean, if you took $100,000 and you went around the world with it, and
that's
you got
fine.
a nice car.
Going around the world is knowledge. You're going to learn. You're going to
Okay.
actually get benefit out of it. It's
Yeah.
not just enjoying yourself, but seeing other cultures, other traditions,
Right.
eating other foods, enjoying their wines,
Yeah.
their
But, well, that's
culture.
what I'm saying,
So,
is
so
like-
that's actually going to help improve you. It's almost like human capital.
Yeah.
You're improving your human capital.
Well, it's investing in yourself in a way, right?
Absolutely.
But that's what I'm saying is like I think it's a lot easier if to save the rest of it, because if you took all of it and didn't get any fun out of it, you're kind of depriving yourself.
Absolutely. I mean, you should enjoy yourself. I mean,
Right.
we only live. If you think about how long we live, it's it's short.
Yeah,
We're not living 1,000 years. We live. The average I think is 83, 84 for a man.
That's
and a
pretty
woman.
high, actually.
It is high, and it's getting better as technology and healthcare improves.
Okay.
But I don't object to people saying, you know what, I have a nice lump sum. Let's take a nice vacation.
Uh-huh.
Or let's go eat out a little
Yeah.
bit more often.
But
Enjoy your life.
I guess you got to be reasonable. That's what it comes
Absolutely.
down
I
to.
mean, we know someone who wasn't reasonable who blew through a lot of money, and
Well, it
the-
is easy to spend money.
the repercussions of that is going to be long lasting.
Right. Right.
And you have to think out what you're going to do to make sure that the steps that you take have a positive long-term effect,
Right.
not a short-term effect.
Well, would you recommend like spreading the money out over different investments, or like focusing on certain ones?
Well, if you're depending on your age too. I mean, if you're someone like myself who's quite young, you can take more risk.
Okay.
But then again, if you're very affluent, you may not have to take as much risk. You can allocate a portion of your portfolio to some risk.
Okay.
But if you have a tremendous amount of wealth, it's like, well, why do I need to risk that if I'm already wealthy?
Right. Right. Right.
But I understand someone who needs to build up a nice nest egg for retirement, they may have to take a little bit more risk to get those high levels of return.
Sure. Sure.
Once you get to a point where you have built a significant amount of money,
Yeah.
you may want to go to a more conservative approach, maybe some muni bonds,
Right. Right.
some mutual funds, some individual stocks. My portfolio, or the way that I would invest, would be geared more towards more quality investments.
Nice.
I would not get involved in riskier stocks because you
Right.
don't really need to do that.
Right.
But if you look at the long term of just investing in good quality, large cap blue chips, especially with dividends being reinvested, a lot of stocks returns come from their dividends, 40%. So
Cool.
if you take a company like IBM or Exxon or Johnson & Johnson, and you own these stocks, and you build a good quality portfolio, they're going to do well because they always increase their dividends.
Nice.
They have great market share. Johnson & Johnson has products all over the world.
Right.
It's a really great company. When you look at like a Coke or a Pepsi, again, they're all over the world. Coca-Cola, even though it's here in the United States, is really an international company.
Oh yeah.
They get most of their sales from overseas. They don't get it from the United States.
Right.
So
That's interesting.
A lot of the third world and a lot of the developed world outside of the United States is enjoying, Coca-Cola products.
Sure.
And they're getting a lot of their growth that way. So even though the trends are changing here, where Americans want to drink more coffees and teas and non-soda beverages,
right.
overseas they like Diet Coke and Sprite and Pepsi and all of those beverages.
That's interesting.
So,
you got to take that into account.
Demographics and the tastes are shifting.
Right. Now, is there a limit? I mean, I know greed can get involved, and you always want more and more, But is there like really, a cap where it's like you can say, all right, now I can breathe easy. I'm good enough for retirement. I don't have to worry about, investing anymore. It's like what I have right now is.
Well, I don't think there's ever a magic number.
Okay.
And the reason being is, let's say hypothetically you had $1 million.
Yeah.
Okay, and you'd save that in your portfolio.
Right.
And then 2000 hit. The market was down like 60%.
Yeah.
So now
that's a big
your
hit.
million is 400,000.
Wow. That's huge.
And your expenses are very much the same.
Right.
So now you're pooling from 400,000 instead of $1 million.
So it's always risk involved.
And 5% is a lot different.
Right.
On 400,000 than it is on $1 million.
Right.
So, especially let's say if you have to pull 50,000. So
Sure.
if you're taking 50,000 out of 400,000, it's a lot more.
Sure.
Then you have to hope that money comes back. So you have to take the time to really pick the right investments. Also, growth is always good.
Sure.
And more is always good.
Sure.
You don't have to risk it. You don't have to be greedy.
Right.
But if you can get that nest egg from 1 million to 2 million, or 2 million to 4 million, or 4 million to 6 million,
right.
It's just about having a certain level of comfort for yourself.
So basically,
you don't know what's going to happen either.
Right.
God forbid you get cancer, something
point,
happens,
good point.
Your insurance doesn't cover it.
Sure.
You may have to pay those medical bills.
So basically, the more you have, the better peace of mind you have.
To some extent, sure.
You
That's
know,
why you see people retiring later in life.
Yeah.
They're working longer because
Yeah.
they need to save more money.
Right. That's it. No, it's an interesting
If
concept.
you get to a point where you've built them enough to withstand and maintain your lifestyle,
Yeah.
then that's great. But
Okay.
you also have to make sure you have enough so if things get bad, that you still can maintain that lifestyle.
So you need
Or
a cushion then. Like,
or have a cushion and then have a sort of a in between. Say, well, if things get here, I can make some cutbacks, but it won't affect me too much.
Ah,
A lot of
gotcha.
people too, as they get older, they sell their homes. That's another bulk of money that they're
Yeah.
able to invest.
Well, that's why I
or
wanted to
keep
ask
in
you. What
cash.
about real estate? Is that a good investment, or what do you think?
I have mixed feelings about it.
Okay.
I'll always say owning a home, especially if you have kids in a family, that's great
Yeah.
because you have a place where you can raise your family.
Right.
That's fine.
Well, you got to pay anyway, right, to live somewhere.
Yeah,
So.
so you might as well just own your own place. As far as commercial real estate, I have sort of mixed feelings on that. It really depends on the rate of return and what you can get it for.
Okay.
And that, that's a whole other topic.
Okay.
For another time.
How much time do we have left, guys? We got 10 minutes left? All right. Well, no, because we've been talking and, you lose sense of time. But basically, I mean, that's a good thing to know because a lot of people, they're so confused, that they either they stick their money all in one basket, and it's really risky, or, they just have this urge to spend it, or, it's just, or they get bad advice,
Sure.
and
Well, that's the thing. I mean, you can understand the frustration that people have. The other thing, too, you have to invest in what you know and understand.
right,
And I know a lot of people who've lost a lot of money, and they say, "Oh, the stock market is a Ponzi scheme or it's a scam." And
well, that can be frustrating.
As I try to peel away and understand, then you find out, well, I lost all my money in some company, and
Right.
it was $50,000.
Right.
And I said, well, what did the company do? It was some weather balloons that were going to launch satellites. I'm like, well, there you go. That's why you lost $50,000. If you wanted to invest in telecommunication,
Yeah.
you should have looked for maybe a Verizon or an AT&T or American Tower or Crown Castle International.
see, the problem-
something that was a little bit more simple.
Yeah.
That we, obviously we all know AT&T, we all know Verizon. Those are big companies.
Well, we've
But
heard
people
of
get
them.
people get away from. They're looking almost for the get rich quick investment.
Well, most people want that, sure.
As much as I'd love to say I have those,
Uh-huh.
or I've invested in them,
Uh-huh.
the odds of you getting that are unlikely.
See, the problem I have, because you're mentioning all these company names, and we've heard of them. They're big. They're big. But no one's an expert on every type of business.
That's why you should always stick with a low-cost index fund.
Okay.
And so you
Well,
don't
explain
have,
what that is.
So basically, you have a company like Vanguard or Fidelity or T. Rowe Price, Charles Schwab, and they
Okay.
offer index funds.
Okay.
And an index fund is a basket of stocks that's been assembled.
Now, they assemble it?
They assemble it. So you have, let's say, the S&P
So
500.
they're the experts. They
They're
know
the
what to...
experts. That's an index like the S&P 500. It's made up of the 500 largest companies.
Okay.
Okay. And you're basically investing in that. Instead of owning the 500 companies,
Yeah.
they've put together the fund that allows you to spread, let's say, your $1,000 or your $5,000 or your $50,000 among those companies.
So you buy the basket they put together,
Exactly.
and then it's spread out.
It's spread out among those companies. So you're
Okay.
going to have Johnson & Johnson, you're going to have General Electric, you're going to have Facebook, you're going to have Merck, you're going to have
Okay.
all the big companies that we all use every day.
Now, what if somebody just randomly picked these big names and put them in a basket? Isn't that the same thing?
Not really, because the allocation's a little different.
Okay.
And for someone to track 500 individual stocks is a lot of work.
Sure.
That can almost stress you out.
Yeah.
Sometimes to track 40, 50, 60 is a lot of work.
Well, yeah, but I'm just saying, let's say, I took 1,000 big names and put them in a hat and took, 100 or 200 and made a little basket and said, okay, that's what I'm investing in. I mean, what is that any worse than what these other guys are doing?
Yeah,
or?
it could be. It could be worse.
I mean, even if they're big names like Coca-Cola and all what you were mentioning. I mean, do you really have to know, do you really have to know every business?
Absolutely, because I'll give you an example.
Yeah.
Okay, products. A lot of people use iPhones.
Yeah.
Well, before Apple made the iPhone, Motorola was the dominant player.
Absolutely.
In the 90s.
Absolutely.
Everyone had a Motorola.
Right.
Then Nokia came and knocked Motorola out.
That's true. I remember that.
Then BlackBerry came in and knocked Nokia out.
Yeah.
And then Apple came in and just basically crushed all of them.
Yeah.
So you have to know what you're investing in, because if you owned Motorola, basically that company is gone. If you own Nokia,
It sounds too scary to me.
if you own Nokia,
Yeah.
I mean, it's gone. If you
'Cause,
owned BlackBerry,
Right.
it's gone. And what I mean by gone, it's gone as a successful investment.
Right.
These companies were juggernauts,
Right.
and now they're minuscule to where they used to be.
Well, for example,
Eastman
now.
Kodak is
Yeah.
another one. I know
Yeah.
that used to be sort of a bedrock in a lot of people's portfolios.
Sure.
Especially people in the 70s, 80s, and the 90s.
Right.
And then they completely decided, oh, we're not going to get involved in digital cameras.
Right,
That's
right.
just a phase.
Right.
And no, it wasn't. It was a real thing because they wanted to stick to their little box cameras.
Right.
And bow. Eastman
Well, you got to
Kodak is
keep up
gone.
with the technology,
They're done.
obviously. But now I'm terrified though, because it's like
Well,
Apple
that's
sounds
why-
like a good investment.
That's why you pick. That's why you pick the That's why you pick the index fund. It's the best way. And even let's say one of those stocks in that 500 goes bad.
Yeah.
It's not going to affect you because you have 499
Okay.
in that basket.
Right.
That if they do well, it's going to make up for that loss.
So-
when you own 300 or 400 stocks
Yeah.
or 30 stocks, when you get that statement, and let me tell you, it's going to be thick.
Okay.
When you get that statement and you see that you're down 60% in the stock,
Yeah.
that's going to hurt. That's
All
gonna
right.
hurt
So
quite a bit.
that's why they tell you to diversify.
And the other thing I want to mention too is that you're more likely to make your money back in an index than, let's say, if you owned individual stocks. Because you
Okay.
can own 30 individual stocks. It doesn't necessarily mean if the index is up 1% that you're
Right.
going to be up.
Right. I got
But
you.
if the index is up 1% or 2%, you're up 1% or 2%.
That makes sense.
So
that
that's
makes sense.
another option too, which is why I like indexes.
Okay. Well, the show's almost over, and I think this was pretty informative as far as, helping people. But, do you, I'm not sure if you want to be contacted by some of the viewers or not. Is there, people still might have questions.
Yeah, I mean, basically, I'm in the process of putting together my website, and
Okay.
I'll come back and I'll set all that up.
All right, so
And
we'll leave that for another time.
But the other thing I want to mention to people
Yeah.
is if something doesn't feel right,
Uh-huh.
then your instincts are probably right.
So you
And so
follow your guts.
go with your gut and go with your instinct.
Okay.
And a lot of times, you'll find that's
Interesting.
That's a good move.
Interesting.
So
Okay.
if it doesn't feel right, if you feel like the person who's trying to sell you something
So don't let
doesn't
people
feel
pressure
right,
you, in other words, right?
And I'm a big believer. If someone's pressuring you, just leave. Because if it's a great investment, it'll
Yeah.
sell itself.
Right, right.
It doesn't need anyone to push it.
That's
if
a
they're
good-
pressuring you, just say, you know what, no thank you.
Uh-huh.
And the longer you deal with them and the more time you spend with them,
Right.
the odds of you probably buying it increase. And so when I've had people try to sell me stock over the phone or penny stock or something of that sort, I just say I'm not interested. And if they keep going, I hang up the phone.
Good call. I love it. Well, thanks for coming by. I really appreciate your time, and it's always a pleasure talking to you. And hopefully it benefited some of the viewers. And you'll be back, so we'll talk about other things when you come back. But again, thanks for being on the show, and hopefully
It's my pleasure anytime.
fantastic. Well, thanks for watching another edition of Access Central TV, and we'll be on again next week. And hopefully you'll tune in again. And until next week, please have a good evening.
Access Central TV.
Some people said I wouldn't want this in 20 years. Well, they're wrong.
Every week we return all our cans and bottles. Yeah, we help to reduce the world's waste.
But aluminum? It's like gold. Oh, yeah.
Environmental defense. Get green. For more environmentally friendly tips, go to getgreen.com.
Oh, there's a bottle.
Where?
Right over there. To your left. To your left. There you go. You got it.